up with your payments, your credit will be okay, right? So lastly, there is down payment, right? So with down payment, the minimum down payment you can usually put when you're buying a home in Canada is 5%, 5% down, and that's for what we call a high ratio mortgage or an insured mortgage. Those kind of mortgages are available for people to take advantage of when their down payment is not up to the standard 20% down. So as low as 5% down, you can put, but there's an insurance premium for those kind of mortgages that are less than 20% down. And if your credit is not as good or not up to scratch, then you will need usually at least 20% down, right? So basically every kind of deal, every situation, there's a mortgage for everybody, but depending on the number of challenges you have, you might have to pay more than everybody else. If you have a clean job, if you're working like for a registered nurse or something, and in a hospital as a nurse, or you're a teacher or a government worker, you're making 100,000 a year, have clean credit, and you've saved up some money, usually you can walk into anywhere and get a mortgage. The challenges as you add one or two challenges to your situation, then you start to need more of a specialist or an expert who is versed with financing a mortgage. Yeah, so I hope that answers that question. I don't want to. There's a lot more that I can say, but I'm trying to stick to time.
Okay, thank you so much. I'll just look for the next question. And that one says, must one have a permanent job before you could secure a mortgage?
No, you don't have to have a permanent job. You can have a temporary job, but if you have a temporary job, the catch with that is you have to have it for at least 2 years, and you should have declared the income on your taxes for at least 2 years. If you're casual, you're temporary, your contract, or if you work on a farm where it's seasonal, where half the year is winter, you don't work, you go on EI, and then you come back again when the weather is good. Now, all those kind of jobs, you can get a mortgage as long as you have a 2 year history of that job, right? There are certain exceptions to that scenario in that if you've been doing this previously in a kind of a job that has, sorry about that, that's my daughter. Yeah, in a kind of job that has if you have a history of doing that kind of a job and then you suddenly quit that stable full-time job and go start doing a part-time job or a temporary job, then yeah, there's exceptions that we can make to that kind of rule. Yeah, but you don't need a full-time job. You can have a part-time job as long as you have a good history or good experience, or maybe you spend the last few years studying to do that job. Yeah. So yes and no.
Okay. Uh, so next question would be, sorry, I did not know that I would have to read out the questions. So let me
I
just
really
quickly.
appreciate you doing that, Seun. Yeah, you made my life so much easier. Well, I've been me switching back and forth on screen.
Okay. There's a question on what would you consider to be a reasonable interest rate right now?
A reasonable interest rate right now, it's well, if you're looking for a 5 year fixed mortgage, if you're around 2% interest, somewhere around just a little below, just a little above, then then you're. Oh, was that me? Oh, okay. Never mind. So yeah, if you're around 2%, yeah, around the 2% range is a good rate. But again, it depends on your situation. You know, we have different categories of mortgage. We have A mortgages, we have B mortgages, and we have C mortgages, right? So for A mortgages, like the normal mortgage you can get from, say, Royal Bank or Scotia Bank, you know, where you get the cheapest interest rate. Yeah, then we're talking around 2%. But for B mortgages, say if you have bad credit, or you have you're trying to buy a grow up, or something is challenging about your file, then you're looking around 3% interest. That's for B lending. And then there's the really challenging issues, like say you don't have a job at all, or you or say maybe your credit is just absolutely horrendous and nobody will touch you, or you're trying to buy some kind of property that no lender wants to lend on, like a mobile home out in the middle of the water or something, like that. Those kind of situations, we need a private mortgage, which I call a C mortgage, right? The interest rates can start from 7% and going upwards on those kind of mortgages. And yeah, it just depends on the situation of the person. So reasonable is very relative, as you can see.
Hey, thank you. We have another question. Um, it says, will my children's private school fees, not daycare, impact the mortgage amount I can receive from the bank?
Usually, no. Yeah, because all that impacts what you can get is what's showing up on your credit history. And for most private schools, they don't report that you're paying those fees on your credit history. And it's not like you borrowed a loan not to pay the fees, right? So short answer is no. But if you borrowed money to pay for your children's private school, and it's a loan or a line of credit or some sort of stuff like that, then it could impact you. But most of the time it shouldn't. I know that I have my children are in private school, and no, it doesn't show up on the credit history usually.
So we have another one that says, how does credit rating affect home buying?
Oh yeah, good. Yeah, like I just explained, right? So you get to fall in different categories. Like um, with the scoring system we use, it's from a company called Equifax. Most people will have heard about Equifax. So there's a maximum score of 900, and the minimum score of I've seen as low as 300, right? So most Canadians are in the excellent credit category, which is anything from 680 and upwards. And then you have excellent credit, right? So anything from 600 to 680, you can still get an A mortgage. Yeah, but you just might qualify for a little less than if your credit was a little higher. And for anything below 600, you are in the B and C mortgage category. Yes, so the credit history determines where you end up. Guard it jealously.
Okay, we sure will. Thank you. Um, there's a question here that says that, is it wise to pull one's line of credit in addition to the down payments in order to reduce the amount on mortgage insurance?
Aha. Yeah. So for it varies from situation to situation, from property to property. So for the person who asked this question, I commend them because it looks like it's a person that does their homework. So yeah, definitely, if you draw mortgage out of your money out of your line of credit, depends on what interest rate they're charging you for that line of credit. Because if you're trying to save a mortgage insurance premium that's charging you say maybe 3%, right? And then your line of credit that you're drawing from is charging you 6%, then it won't make much sense to try to draw that money to be able to save that mortgage insurance premium. But whereas if you are in like a credit union, like I bank with Other Group, and they gave me a line of credit at one time for prime, and prime right now is 2.5%. So if you get that kind of a line of credit that's charging you 2.5%, and your mortgage insurance is 4% or 3%, then by all means you can do that. But the caveat to that is the line of credit can affect the mortgage amount that you get, because we have to factor in a monthly payment to that line of credit. Okay, so the line of credit payment that we factor in is usually 3% of the balance that you borrow. So that monthly payment will impact the total mortgage that you can get. So if you have like a high income and it doesn't matter, you can go over a million or whatever, then that thing doesn't matter. But if the ratios are really tight for your deal, then you want to be very careful about drawing money from your line of credit.
Okay, thank you, sir. I would like to um, So our participants, please, if you have questions, you could kindly just drop them in the chat section so we can ask these questions. I think I have one more question and then, okay, sorry, please hold on. Okay, sorry. We have a few questions already. Okay, so I'll just go through those ones. There's a question that says, what criteria influences getting the government support for a first-time home buyer?
So yeah, it's a broad question in that the government has multiple areas where they support first-time buyers, right? Um, there is the first-time buyer shared equity incentive, where you uh, where they get to give you some of the down payment. The government also supports you by letting you draw your RSP to to purchase a home. They give you exemptions on property transfer tax. They give you GST exemptions, and they give you a tax credit. Yeah, when you're a first time buyer. Yeah. So yeah, I'm not. I wonder if the person can clarify which government incentive it is that they are referring to.
Okay.
I will if I maybe if I presume that it's probably the down payment one, maybe the shared equity program. Yeah, with that program, you can buy a place up to 400,000, and you can't buy a place more than 4 times your income. It hasn't been very popular here in DC because there's not very much that's priced in the range of that program. Yeah, and yeah, it's you can find a lot more information on the website. I think it's called place to call home.ca. Yeah, place to call home.ca. You find all the criteria on that program. Yeah.
I think thank you so much. We have one other question here that says, how many times can I qualify for a 5% rate for a
I'm living testimony here. I can testify to that. When I first started purchasing properties, um, I didn't have that much money, to put down. So what I was doing, I was taking advantage of a loop of that 5% down loophole. I'll buy a place, live in it for about a year, and then move out of it, change it into a rental property, and buy the next and move into the next one for 5% down as well. And then suddenly I have two properties. And then I did it again, moved away from the second property into the third property. And then I had three properties, right? And yeah, so you can go, the banks will stop you somewhere around five properties usually. But yes, 5% down. It's a very good question because it's a big misconception of that 5%. Because people think that once you get the 5% down the first time, the next house will now be 20% down or whatever. No, that's not the case. As long as you're living in the house, it's always 5% down. You have to pay 20% down if it's a rental property. You don't intend to live in it. But even if it's a second home, like say you're buying a property for your child that's going up to university, or you're buying like a cottage and a vacation area near the lake or whatever, yeah, you can still buy them at 5% down.
Okay, thank you so much. Just to make it easy, I'm going to, Ruti, you could please help read the questions that come up in the comment section while I try to get the questions that we have on the group.
Okay, sure.
Yeah.
Hello, Mr. Greg. Thank you once more. So the next question is, what financial sense does it make to buy outside your province of residence.
I,
For this, you can shed more light on it as a broker, and then we can also ask our realtor later on. She wants to know the financial sense in buying outside of your province or residence, and does this have any impact to the mortgage?
right. Okay, yeah, I hope you would, right now, a lot of my question has been yes and no, or it depends, right? And this is going to fall into the same category because when you say you're buying outside your province of residence, are you buying to go and live there, or you want to buy to like to rent it out, kind of thing, right? You want to stay here in this province and then buy in the other province and stay there. Right? So it's two different things, right? So if you're trying to buy a rental property elsewhere and then live here in BC, as long as you do your due diligence, it could make a great financial sense. Yeah, but if you're also trying to move, you have to be careful that whatever income that you're making right now in BC, if you're going to be losing that income after moving, then you can't use that income to qualify for the mortgage of the place you want to buy.
I have one question from the WhatsApp. So it says, if one is interested in like flipping a home flipping of old buildings, how can that be financed?
Oh yeah.
Can you get a mortgage for that?
Oh yes. You can get a mortgage for home flipping, but most of the A lenders, the normal cheap, Scotiabank, Royal Bank, TD kind of lenders, they don't like you to pay out a mortgage so soon after you get it, because they want you to pay them uh, tens of thousands of interest over the next 25, 30 years. Right? So the best way to get a flip mortgage is through private lending, and you can get like a private line of credit, and that's usually that's what I find is cheapest, to flip for flipping homes. Yeah, yeah, and it depends on what you're doing. If you just need the money for the down payment, yeah, then yeah, it's a bit challenging. But if you already have some down payment and you need the funds to do the renovations before you flip, then there are tons of lenders who will do that, who will give you the money to renovate and flip. You just have to know what you're doing, because you have to give all the numbers as to what you're going to do. The price that you're buying it at is going to be have to be low enough, and when you finish your renovations, there will be an appraiser that will come check the house out to make sure it's now worth more than you paid for it, plus whatever profit that you are intending to make. And there has to be a good market where there's ready and willing buyers, to buy the place from you once you are ready to flip. And the lenders will jump on it. The lenders, I know several lenders that like that. Yeah. So so yeah, that's possible. That's for renovation and flipping. There's also flipping condos. Like if you want to buy, like say, a pre-sale condo that's going to be completed in like a year or two, and then before that day, you want to assign your contract to somebody else so that you can make money based on the value having gone up. Yeah, that's it's becoming a little tricky to finance that, because the government is coming down hard on that. The developers too are coming down hard on that, and but it's still possible. I still see people doing it. With that, you don't need financing for that. You can just put a small deposit down to hold the place.
Okay. Similar to the last question, one of us wants to know if it's possible to live outside BC, like possibly in Alberta, and get a mortgage in BC.
Yeah, you can do that. Yeah, I myself personally, I have 3 mortgages in Alberta right now. Yeah, and yeah, you can do that for sure, as long as your income will support getting those mortgages. Yeah, and as long as, if it's a rental property, the income you make from the property is covering all the expenses. Yeah, it happens all the time. Many people who have big equity in their property here in BC, they bought in other provinces. Yeah. I do that all the time. I think I would say every 4 every fourth or fifth deal I do is for somebody who wants to buy a second property elsewhere. Maybe a few like town in the interior of BC or a different province.
Okay, thank you so much. Ruth, do we have more questions? I've run out of questions from the WhatsApp.
There's one more question, which I think would be answered by both the mortgage broker and realtor. So we want to know about the foreign property tax. So the foreign property tax in BC, does that have anything to do with the mortgage?
Yeah, generally it doesn't have anything to do with the mortgage, but as a mortgage broker, I've learned to do my due diligence and make sure the buyers are aware of that, right? Because especially with we as new immigrants, sometimes we're on work permit, right? And on work permits, and you're living in the BC Lower Mainland, you'll be subject to a 20% foreign buyers tax. Even if you are you just you're about to get your provincial nomination or any kind of thing like that, as long as you don't have your PR or citizenship, you're subject to that tax. But if you move out to Kamloops or Prince George or Kelowna, you have to pay the tax. And some other towns in the interior, there's a list on the BC government website. Yeah, then you get to avoid that tax. And other provinces as well. Only Ontario, I think, is the province that's adopted that similar model. But yes, we have to be really careful about the foreign buyers tax. There was I've seen somebody who uh, who has a brother living here that already had their PR, but they were on work permit. So they collaborated, and the brother joined them to co-sign the mortgage. So at the end of the mortgage, they got the lawyer to assign 98% ownership to the brother who has the PR. So the 2%, the 2% ownership was then taxed, and the tax wasn't very much. It was only a few $100s. So that was one way that I saw. I've seen people get around it, but that's the government is starting to watch those things too. So long story short, get your PR, or if you don't have your PR yet and you really, really want to buy, then maybe just move.
Thank you so much. Thank you so much, Mr. Greg.
You're very welcome.
If you have more questions, guys, please drop your questions in the comment section before he leaves. But we'll just like for you to just shed more light on, or just give us a general advice basically on how to go about getting everything you feel we should know that you haven't spoken about yet.
Yes, getting a mortgage, the first thing that anyone should do is talk to a mortgage broker, like myself, because even if you're not intending to buy right now, but you're intending to buy sometime in the future, it's always good to talk to a mortgage broker so that you can get a game plan in place. Because what people tend to do is wait until they're ready to buy and then discover that, there was that speeding ticket that I never paid um, 3 years ago, and they've added thousands of interest on it, and it has wrecked my credit for over all this while. And we have to wait for at least 6 months to a year to fix that. I can't buy. Or maybe I was full time before, but I discovered I can make more money as a contractor or as self-employed, and I just quit my full-time job just last month too, and now suddenly I'm self-employed. You need 2 years history as a self-employed before you can get that mortgage. If you just applied just last month, you would have gotten the mortgage, no problem, right? So, you get the point. So that's what I would say, because it's hard to just give a blanket statement that applies to everybody, because everybody's situation is so different. Everyone is so unique. the one biggest advice I can give you is whoever the mortgage financial advisor is that you trust, just go and talk to them and tell them what you intend to do over the next little while, or even 10 years into the future. I make plans for people who want to buy 20 properties by the year 20 whatever, and we create a plan for them, and they start to achieve it, one by one as time goes on. So that's my best advice. Yeah.
What is the thank you. What's the financial implication, or what's involved in getting a consultation with a mortgage broker, just for benefits of like yourself?
Nothing. It's completely free. You don't pay anything. We as mortgage brokers, I get phone calls 9 p.m. at night, 11 p.m. at night. I'm not saying anybody should call me at those times, but we are very flexible. We are in the community. You can tell us things that you can't tell the bank. Because we are closer to you, right? And we can give you genuine advice that will help you, at no cost, no obligations. And even and eventually, when we provide a mortgage for you, the service is still free because the bank pays us. So it's a service that everybody who wants to own a home should take advantage of.
Okay, thank you so much for all the information that you've shared with us and for the time. I do know that we have 5 minutes as discussed. You did say you want to leave at 6:45. So for the benefits of everyone who still have questions, would it be okay for us to share your, they can always find you on LinkedIn anyways.
Oh, absolutely. Yeah. On LinkedIn and on my website as well. Yeah, gregoryero.ca, or just Google my name. You'll find my whole life history on the internet. You'll see where to find me. My phone number is everywhere. My email is everywhere. Just feel free to drop me a line, text message, WhatsApp, Facebook, anything. I will reply you with the answer to any question you have.
Okay. Okay, thank you so much, Mr. Greg. Thank you for taking the time to speak to us today. God bless you.
Oh, yeah, thank you so much for inviting me. And yeah, I'm about 80 to 90% of my clientele are Nigerians, and I jumped at this opportunity because it looks like an opportunity to speak to more Nigerians, because if we don't support each other, this is there's not very much else that anyone can do to help us. So yeah. Oh, thanks for posting my information there, Ruth. Yeah, and yeah, thank you so much again, Seun, and I'm very grateful for this opportunity, and I'm looking forward to helping everyone grow and achieve their real estate goals.
Okay, thank you. Thank you too. So moving on, we will be listening to our second speaker, Sister Temi Aluko. She's a realtor. And okay, I'll just say over to you.
Yeah, it's my pleasure to be with you tonight. And I would like to kind of walk us through the buying process, So the first person you need to talk to is Greg, all right? That's the first person to start with in the buying process. I cannot do anything for you unless you talk to a mortgage professional, okay? Because it's a mortgage professional that will let us know what amount you are pre-qualified for and if you are ready to buy. Sometimes some people come to me ready, they are saying they want to buy, then I send them to a mortgage professional and said, just talk to this person, and then you discover they are not even ready for the next 6 months. Either their credit is bad, their finances is bad, one thing or the other. So in this process, the first person to talk to will be a mortgage professional. Now, I would like to share my screen. Is it possible for you to make me a co-host?
Yes,
Or
please.
do you have that? So I can walk you through the buying process.
Okay.
Like I always tell my clients, okay. Looks like we're having an echo somewhere. Like I tell my clients, an informed buyer is the best buyer. If you want to have a buyer that really knows what they're doing, then give them basic information. So is it okay to share my screen? Okay, thanks. All right. So this is the first thing I want to share, your relationship with a real estate professional. Because in my capacity as a real estate professional, I'm sharing some information with you. The government requires me to make some declarations to you. So as part of the regulatory requirement for presenting you with this consumer information before providing services to you, I have to explain to you what it means to be a client and as a non-client, to just be brief. A client, if you come to me as a client, you have loyalty. We will act only in your best interest. There will be full disclosure. We will avoid conflicts of interest, and there will be confidentiality, okay? As a non-client, a real estate professional who is not representing you as a client does not owe you any special legal duties. There's no loyalty, no duty of full disclosure, no duty to avoid conflicts, and no confidentiality, okay? So normally, if I'm meeting with you one-on-one, I have to give you this, and I have to make this disclosure. It is mandatory for me to do that, and then you can decide and say, okay, either you want to be served as a client, or you just want to be a non-client. Then that will be your choice. Now, home buying step by step. So I want to walk us through. The first step is make sure you are ready, okay? Step number 2, know your financial situation. Number 3, calculate the cost. Number 4, determine your needs. What are your needs? What kind of home are you searching for? Maybe you are a family, a young family, husband and wife with 2 kids, then definitely you need a 2-bedroom or more, so you need to determine your needs and what features are important to you. Some people want backyards, a little backyard for the kids to play around and all that. So you need to kind of write out what are the things I really, really need in a home. Step 5, find the right professionals. Buying a home requires services of real estate professionals, lawyers, mortgage professionals, home inspectors, and so on. It will give you peace of mind to have experts on your team to answer your many questions along the way. So we thank God for Greg, who did a very good job tonight of kind of intimating us and giving us necessary information to prepare us for getting ready to buy our home. Then, of course, once you find the right professional, you start the search, you make an offer, close the deal, budget, and then home maintenance. So this in a nutshell is the steps, but I went further to break it down, okay? I know that many of us are first-time buyers. So part of our job as professionals is to hold you by the hand and walk you through, because we want you to have peace of mind. We want you to be happy with your purchase, okay? So I designed this package to assist you with the purchase of your new home. I assure you that it's our goal to provide you with the most professional and informative service available. I'm always just a phone call away or a text away, or, nowadays you can do email, text, all that. Okay, so first step would be find a realtor you can trust. You just don't want to, buying a home is one of the biggest financial decisions that we all make. You know, nobody buys anything for 200,000 or 500,000 or 800,000. So this is your biggest asset. So you need the right professional on your team. Okay. Then we analyze your needs in a consultation. Most times it's good to meet face to face, or we can talk over the phone. You know, nowadays I say, text me, what do you need, or email it to me. But the step 3 is the most important. Obtain financial pre-qualification and pre-approval. Some realtors will take you out. You say, oh, I want to buy a house, and then they take you out. No, we need to know how much are you pre-qualified or pre-approved for. If I take you out and I show you houses of 500,000, you know, meanwhile, when you get a pre-qualification, you can only afford 300. Then by that time, I've kind of enlarged your expectation. You prefer a $500,000 house to a 300,000, definitely, you know. So the first place to start is talk to a mortgage broker. The mortgage broker will help walk you through your financial situation. You know, if your credit is bad, then they will tell you you need to do this, do this, do that in order to improve your credit. Okay. If you need, maybe you just started a new job and you've been on the job for 4 months, but you need 6 months for your probation to be over, then the mortgage broker will let you know that, oh no, you need to be on your job for 6 months, and then in 6 months' time, come back. I mean, in 2 months' time, come back. So that is so important. That's step number 3. You must obtain financial pre-qualification and pre-approval. Maybe I show you $800,000 home, and you can only afford 500. Then I've raised your expectation. And then by the time I start showing you $500,000 home, you are like, no, I don't like this. I don't like that. I don't like that. So step 3, very important. Even if you are not ready to buy right now, give Greg a call, you know, so that you know where you are at. And then from there, you begin to plan and make necessary steps. But once you are ready and you've talked to the bank or to your mortgage broker and you have that pre-qualification and they say, okay, you are pre-qualified to buy 500,000, then you come to me, you know, then you tell me, what do you want? You know, maybe you tell me and say, okay, I like Surrey area. I remember somebody on the chat said, myself and my wife will work in North Van. You work in North Van, definitely you want to buy a house closer to where you work, right? But unfortunately, probably your income might not be enough for that area, because a 1-bedroom, I've sold a 1-bedroom in North Van for 475,000. Meanwhile, with 475,000 in Surrey, you can get a 2-bedroom, 2-bath, or even a 3-bedroom. So it just depends on what area you want. The closer you are to town, to Vancouver, to North Vancouver, the more expensive the properties are. You know, the further away you go from town, the cheaper and more affordable the properties are. A house, say a 6-bedroom house in Maple Ridge, might be selling for 900, 1 million. The same house, if you take it to Vancouver and sit it down there, you are looking at 2 million or 2.5. So the areas determine the price. Okay, so what you tell me is what's your price, what cities you are looking for, what kind of properties you are looking for. Actually, your price will determine the property you are looking for. You know, if your price is 500,000 and you are looking for a 3-bedroom, I will say, okay, you can't get that in Burnaby or Vancouver, you know, most likely. Probably you might have to look at New West or Coquitlam or Surrey or any of those places. Anyway, so once we have your criteria and I put that in, I go online into what we call the MLS. MLS means multiple listing service. And that service is all the realtors putting all their listings. Okay, so maybe I have a listing, I put it on the MLS. Realtor B and C and all other, we're about 10,000 realtors in the Lower Mainland. We all put our listings on the MLS. So any realtor can go on the MLS and search for what is available on the market. Okay, so based on the search criteria that you send me or that you give me, I will email you properties and say, these are the properties available in the Surrey area based on your search criteria. You know, if you have children, then you don't want to look for houses where they'll say there is age restriction. Maybe age restriction, 17 years or 19 years. If you are over that, you can't live in that place. No, you want a place that is doesn't have age restriction. And then if you are thinking of renting, then you don't want a place where renters are not allowed. You want a place where renters are allowed or renters allowed with restrictions. So based on the different criteria that you send me, I will email you properties. And then you will select properties that you want to view. Say for instance, I email you about 20 or 25 properties. Then you will look through, most of them come with pictures, you take a look inside and all that. Then you select the properties that you want to view. Then we will fix a date and
Zoom on how to buy a house or something. Zoom stuff.
Sorry?
Please, can we all just mute ourselves?
Oh my God, I'm sorry.
All right. So based on the properties that you select, we'll fix a date to go and see the properties, to view the properties. And then out of the properties we view, you know, it might take us 1 time or 2 times, you know, to go out until you find what you really like. And then based on what you like, you will select one on which we write an offer to purchase. And then with the offer to purchase, now this is where the Nigerian part comes in. We negotiate back and forth, right? We negotiate back and forth. You know, maybe the offer is listed at 600,000, then we'll put in an offer for 500, and we, you know, 550, then we go back and forth until we get it for you at maybe 570 or something. So, you know, that's a plus for using a Nigerian, because we know how to do the haggle. You know, we know how to negotiate a good price, okay? So once we negotiate and the offer is accepted, it's called an accepted offer. On that, we will have all the initials and signatures. Copies will be sent to each party. I will send you as a buyer a copy that you will give your mortgage broker. Of course, you will have completed the mortgage application. They will do your credit, the appraisal, and all that. So in this offer, there will be what we call subjects. Subjects are there to protect you as a buyer. The subjects are there, are inserted, because it was always say subject. This subject is for the sole interest of the buyer. Okay, so we put subject to financing, subject to inspection, subject to review of the property disclosure statement. You know, that means the person who is saying I own this is the person that really owns it, right? Subject to the title, subject to home insurance and strata documents. If you are buying a condo or a townhouse, then you will need to read through the strata document. If you are buying a single family house, you will need to get home insurance, you know, and then we'll get a copy of service certificate. Well, when all these subjects, now we also put subject to COVID, subject to this, just to protect you as the buyer. So once these subjects are completed, are fully satisfied, okay? That means the bank says, go ahead, we're giving you the mortgage, we've reviewed the property disclosure statement, everything is good, title is good, inspection, you do inspection is good, all that. Then we come to subject removal. Subject removal is when you are saying, okay, I'm satisfied with this property, I want to go ahead with it, I'm going to remove the subjects. And that's when it's literally means you have bought the house. But then you have to give a deposit money. The deposit money is usually about 5% of the purchase price. Okay, so if you are buying like $500,000 house, then your deposit money will be roughly $25,000. Then after that, you choose a lawyer, a notary, you give that name to me, you complete on the property, and then you take possession of your new home. So normally inside the offer, we have written the date of completion, the date of possession, and all that. All right. So this, in a nutshell, is what I call the home buying process. Okay. And then the next thing I know that most of us are asking is the BC property transfer tax and first-time home buyers exemption. For everybody that buys a house in BC, everyone is required to pay a tax. It's calculated as 1% of the first 200,000 and 2% of any remainder, okay? And it's paid, it has to be paid on the date the purchase is completed at the land title office. Now, if you're a first-time home buyer, like most of us, you know, on this panel will be, to qualify for the first-time home buyer exemption, the first-time home buyer must have never owned a registered interest in a principal residence anywhere in the world. Well, they can check what happens in Canada. So if you own a property here in Canada, you definitely cannot qualify. Now, your maximum purchase price must be in the lower mainland will be 500,000 to qualify for full exemption. But there is a proportionate amount of exemption if your property is up to 525,000. Okay, but if you are buying anything over 525, the government believes you have the money to pay the tax. Okay, so if you are buying 550 or 530 or even 525, you have to pay the full tax. Anything below 500,000, you don't need to pay the tax. You know, anything above 500, you know, you pay a graduated amount to 525. Anything above 525, you pay full amount. Now, the other qualification is that you must be a Canadian citizen or permanent resident of Canada, and the mortgage must have a term of at least 1 year. It must be at least you must be placing 70% of your mortgage, of the value of the property as mortgage. So you can't put, say, 35% as down payment, and you are a first-time home buyer and you want the exemption. They believe you have the cash. So the reason why they give this exemption is just to help first-time buyers to get into the market, you know, help them to get into the market so that they, like now, if on 500,000, your property transfer tax would have been $8,000, you know, but they don't want, they know that putting $25,000 savings and all that, and adding another $8,000 on top will be too much for people. So they are helping first-time home buyers to get into the market, all right? And then the next thing I would like to talk about is the buyer closing cost. It's important you know what to be your closing cost. So I'm just going to use 500,000 for instance. If you're buying a place of 500,000, your deposit will be 25,000, which is roughly 5% of the purchase price. Okay, probably you decided you want to put 10% down. Then in that case, your down payment, the total down payment will be 50,000. But if you are just putting 5% down, if you have a regular job, most times you can put 5% down. If you're a business owner, then you will be required to put 10% or more as down payment. Now, for most people, it's best to do an home inspection. Home inspection, it will be a certified home inspector that will help you to do the inspection, and it generally costs 500. You know, I just had a buyer buy a condo and she paid 400 and something. And she said that was the cheapest she found. So sometimes it could be 5 or 6 or more. Legal fees. Legal fees, you will need a buyer, a lawyer or a notary to complete your purchase. So legal fees for notary starts around 800. Some lawyers charge as much as 1,200 or more. So you need to budget for that, okay? We've talked about property transfer tax. If you buy anything over 500, say you are buying a $600,000 house, then you'll be looking at $10,000 to put aside as part of your closing cost, okay? Then they will do some adjustment, of course, municipal property tax. Say this is September and you are buying a house now or a condo or whatever. There will be tax adjustment. The seller will be paying the tax from January to now, and then you pay the tax from now to the end of the year. So your lawyer or your notary will do those adjustments. And then of course there are strata fees that also they will adjust it. So normally when I meet with you, I will help you calculate your closing costs so that you will know whether you have enough, enough money at hand for your closing costs, because we don't want you to go and buy a place and then you suddenly realize you don't have enough money, right? And we also don't want you to buy a place and then you can't feed your family or live a quality kind of life. Now, fact sheets. This is from the Real Estate Board of Greater Vancouver. There are 31 different grants and rebates for home buyers and homeowners and renters. The first one on the list is the property transfer tax, which I've explained, that first-time home buyers can qualify for. The next one is property transfer tax for newly built home. I remember somebody on the chat was asking about what's the difference between buying an older house, okay, and a new house. If you are buying a brand new home, you have to pay what is called GST, okay? I believe we all know what is GST, Goods and Services Tax. It goes to the government, so 5%. So for instance, you are buying a place of 500,000, okay, brand new. Normally you pay GST on top of whatever else you are paying. So that's 25,000. Now, for newly built home, you normally, if for any house, if you're a first-time buyer, less than 500, you don't pay anything. But if you are buying newly built home, up to 750, they give you that exemption. Why? Because they are trying to help developers, to sell their places, right? So the government decided to help that qualifying buyers of new homes will be exempt from paying the property transfer tax on a newly built home or newly subdivided unit up to 750, okay? So between 750 and 800, you pay a graduated amount of tax for newly built home. But anything above 800,000, you will pay your full tax, okay? And then there is BC homeowner grants. For every homeowner, you get up to 570 on your property tax. Now, property tax is what you pay annually. Everybody in Canada pays property tax. So anyway, these are just a few of the 31 different great grants, that because I know our time is limited, that you can access. There is CMHC first-time home buyers incentive. I think somebody had asked about that. So all these different grants and incentives are available. Now, privacy notice and consent. So I know that a lot of us, we are very, what will I say now? We are very concerned about our privacy. So whatever information is collected from you, we have a duty to protect your information, okay? we have a duty, and when we sign this, we let you know that your realtor is making sure that your privacy is protected, okay? And then Canada's first-time home buyer incentive. A lot of mortgage brokers say that it's best not to take this because it means that the government is going to have a say in your home when eventually you sell it. So that, in a nutshell, is what I will call home buying process. All right. So any questions?
Thank you so much, Auntie Temi. Thank you.
Welcome.
So if you have questions, please, guys, let's drop our questions in the chat section so we can take them.
Yes, I see somebody say if one pays 20%, something gets waived. That's right. Anybody coming with a down payment less than 20%, you have to pay insurance. It's called mortgage insurance. I believe Greg must have touched on it. Mortgage insurance means they see you as a high-risk borrower, okay? And pay mortgage insurance means that they are insuring your mortgage in case you default and run away. Some people, they want to look for foreclosures. What happens with foreclosures? Somebody defaulted in paying their mortgage. So the bank had to foreclose on the house. And when they foreclose, it means that the bank takes over the property and they sell it. You know, they sell it sometimes at just to recover whatever is their money. But the bank's money is being insured by the Canada Mortgage and Housing Corporation. So when you put 20% down, you don't pay that insurance premium, okay? But if you are putting 5% down, then you have to pay the insurance premium. So insurance premium right now for 5% is about 4% of your purchase price, okay? So if you are buying a place of 500,000, 4% of that purchase price goes to insurance premium. Normally they put it on top of your mortgage. They add it together with your mortgage. But if you are putting 20% down, then you don't need to pay that mortgage insurance. All right.
We have another question that says, what's the general market like in BC, Vancouver and environs in terms of getting good property for investment?
For investment, well, right now the market is kind of hot because we're kind of combining both the spring market and the summer market together. So because of COVID, so many buyers were sitting on the edge, but now so everybody is kind of out in the market. So the market is quite busy, that I would say. I've been involved in so many, what will I call it? So many multiple offers, you know. Initially the market was so slow, but now the market is so busy that even yesterday I lost an offer because we got into multiple, you know. So, but it doesn't stop people from buying, and we're still getting a good rate. I just wrote an offer for somebody and we were able to slash the price down by 30,000, you know, so that's a good one. Yeah.
We have a question on it says, what are your thoughts on the interiors like Penticton, Prince George, Kamloops, etc. in terms of home value appreciation? Is it worth buying over there, and does the home appreciate like in the lower mainland?
Definitely not. They don't appreciate as much as here. If you are buying it for investment purposes and you are just sitting on it, then that's fine, you know, because with time it will appreciate. But in terms of greater appreciation, I would say buy in the lower mainland, right? I had a lady I sold into a townhouse, 3-bedroom in Surrey 5 years ago. And now they were thinking of selling, and their property, in fact, has almost doubled. The properties that are sold in that area are selling for like $575, you know. So I think it's properties appreciate better right here in the lower mainland. Yeah.
Okay, so there's a question on Should the age of the home matter in decision making?
The newer, the better. But there are some homes that they are well maintained. Okay, there are some places, even condos or townhouses, you enter into them and you are like, whoa, you know, it's been totally renovated, you know, granite countertops, quartz countertops, stainless steel appliances, bathrooms renovated and all that. So, and there's some brand new homes, not brand new, at least fairly new homes, and you are like, whoa, this place looks like it's badly used, right? So it all depends. Any other question?
Yes, someone is asking in the chat section, what does it entail building a house?
Building a house is very dicey. You have to get a construction loan. So I think you need to talk more to Greg about that. Yeah.
Okay, there's a question on do I pay tax on the entire amount of selling a home or just the profit?
If it's your home, your personal home that you are living in, then you don't pay tax. You don't pay tax on the profit. Okay? You don't pay tax on the, but if it's an investment property, then you pay tax on your profit. Yeah.
We also have general questions and areas that you probably recommend. Probably are there like high crime areas that one should avoid in BC?
Well, most places have a little bit of crime or the other, but in terms of the higher rate, I think we will be looking at Surrey, because that's where we see mostly in the news. But there are so many areas in Surrey that are very safe also. Very, very safe, yeah. Fraser Heights is safe, Fleetwood is safe, you know, and even Newton, where you have majority of the crime, you know, some parts of it are safe. So, yeah.
Okay, there's a question that says, which areas in the lower mainland have relatively affordable houses? We're talking about like lower 400s.
When you say houses, are you talking of condos or townhouse or single family homes?
I guess all of the above.
Okay. So condos are apartment kind of places that we know, probably from 2 to 3, 1, 2, 3 bedrooms. Okay. Then townhouses, what's the difference between condos and townhouse? Condos have a general entrance, right? You have a common entrance. Townhouses, even though it's a strata, has separate entrance, okay? So you can go into your own townhouse straight from your garage or carport or whatever. But with condo, you have to come in through the common entrance. Both condos and townhouses have strata fees. Now, when you say strata fees, what are those entail? Strata fees most times covers a management fee. It covers garbage, you know, gardening and all those things. So those strata fees and also insurance, strata insurance. And some people ask me and say, is it better to buy a single house or strata? It depends on your financial capability. If you are able, of course, it's always better to buy single property home, right? But some people want to avoid strata fee, paying strata, and I say no, because when you own your home, you're still going to pay. For instance, in my house, I pay almost $400. Okay, say about $4,500 for insurance on a yearly basis. So if I break it down, you know, to monthly, I pay about $400, you know, on just what did they call it? On just my fire insurance, fire and earthquake insurance, right? And then of course, if anything breaks in my house, I have to fix it, you know. But in the strata, anything external is being fixed by the strata corporation. Anything external is being dealt with by the strata corporation. So it takes the pressure off you, you know, to do any repairs. As a first-time home buyer, actually, it's better for you that the strata is doing all those things for you. Anything internal is your responsibility, okay, to fix and all that. Anything inside your unit, whether your condo unit or your townhouse unit, is your responsibility. But when you're talking of a single family home, you are responsible for fixing anything and everything. Okay, so there are no horror stories about strata fees. You know, for in the recent, what will I say? In the recent 6 months to 1 year, there's been increases because strata insurance went up in the whole of BC. You know, so there have been a bit of increases. So what I will say with stratas is, if you are going to buy a strata, you must read the strata minutes. You must know what is going on in the strata. Read the depreciation report. Whichever realtor you are working with, once you put in an offer and you have an accepted offer, they will email you all the strata documents. Don't just keep it and sign. You read it, take time out, read the strata documents. They will have annual general meetings, they have strata council meetings, they have depreciation reports. Some of them, the older ones, they have engineering report. Now, why do they have all this? Because the government doesn't want you to, they don't want you to be slapped with a 20,000 or 30,000 repair bill. They want that you will know ahead of time, say in the next 5 years, we have to replace the roof, or we need, the strata needs to do this and do that. So with the depreciation report, you'll be able to know these are the things that needs to be done, you know, and then the strata itself plans ahead. And then you will need to check the CRF, it's called Contingency Reserve Fund. So part of the strata fees that you pay, they put some money into the CRF, the Contingency Reserve Fund, and that fund is in case of any little emergency, you know, that the strata faces, then the strata is able to go ahead and do some repairs, you know, on behalf of the owners, okay? And then, so you also want to check the CRF to make sure that the CRF is buoyant, you know, is healthy, and the strata is healthy. So please read the documents, the strata council meetings, the annual general meetings, the depreciation report, and the engineering report. Very important. Okay.
Okay, thank you. There's a question on someone's clarity on a 5-year period versus a 25-year amortization period.
Okay, so in Canada, the minimum, if you are putting anything less than 20%, the maximum amortization period for you to repay your mortgage is 25-year amortization. But then actually this is a this is a mortgage question, right? You should have asked it to Greg. But the 5-year period is called 5-year term, is when you can renew your mortgage. Okay, say for instance, when I started paying my mortgage, I got it at 3.5. Okay, so if they put it 3.5 for 25 years, I'll be stuck with that mortgage. So within 5 years, when I come out of that mortgage, maybe the interest rate right now has reduced to 2 point something. It's my lucky day, right? And now I can renew that mortgage for the next 5 years at 2 point something percent or at 2%. Yeah. So, and also there is possibility of being in a fixed mortgage or a variable mortgage. So with the fixed mortgage, you are locked in. It's good when prices are going up or when interest rates are going up. But right now, you know, the interest rates are going down. Variable is your best bet. Variable mortgage, then you are able to say, oh, the interest rates are, maybe when you came into your mortgage was 2.5 or 3%, but now it's 2%. It will save you, you pay less money on interest. But when the market is good and things are going up, interest rates are going on, it's better to lock it in a fixed mortgage. Okay, so the 5-year period, the 5-year term is just the term at which you are locked into a particular interest rate. But the 25-year amortization is the length of time that they spread your mortgage. They spread your mortgage over 25 years. So that, say, for instance, your mortgage is 500,000. So they spread it over 25 years. Okay, so 25 times 12, 25 years times 12 or 12 months. So it will help them to calculate how much your monthly mortgage will be. Any other question?
Yes, and the person would also like to know what are the advantages of having a realtor?
Well, the advantage of having a realtor is that your realtor is there for you. They take you by the hand, they walk you through the process, the buying process. If you don't have a realtor, you are more or less on your own. You can be what I explained earlier, an unrepresented party. Before, when we used to be able to do limited dual agents, that means I'm representing both the seller and the buyer. But now it's against the law for us to even, if I'm representing the seller, I can't represent a buyer in the same transaction, So the advantage of working with a realtor is that the realtor walks you through, they explain things to you, they are there for you, and you have a professional working with for you. Now, the good thing you should also know is that you are not paying a realtor. As a buyer, you don't pay the realtor. Good. Okay, good question, sister. Yeah, it's the seller that pays the realtor. So if I'm working for a seller, for instance, I listed a property last Wednesday. The seller, in that listing contract, I already told the seller, this is how much you are paying both realtors, both the listing realtor and whoever is bringing the buyer. So if you see on an MLS listing, it discloses that how much the buyer's realtor will get. Okay, let me see. For instance, I just showed the property this afternoon. On that place, you will see that it shows you how much the buyer, every realtor is mandatory, is something you must fill in your listing contract, how much the buyer's realtor will be paid. So in BC, it's the sellers that pay the two sides of the realtor, both the listing realtor, their own realtor representing them, and the buyer's realtor. So as a buyer, you don't pay the realtor. Anybody that is trying to charge you any money is fake, and yeah, don't listen to them.
We have another question. Is it true that homes that are built in the 90s are not good structurally?
Well, some of them, we had what we call the leaky condo problems back then, but most of the leaky condos, that means they were not built with they were not built with a protective, a water resistant protective. Okay, but then since then, a lot of them have been repaired. So any of the condos right now, most times at that time, it happened mostly with the condos and probably some townhouse complex, But since then, the construction requirement has changed, that the water resistant covering has to be put in place. So right now, there is no problem with leaky condos. And also those built in the 1990s, a lot of them have been rain screened. So that's what we call it. They call it rain screening. So a lot of them have been rain screened and they are okay right now. But like I said before, you must read through your strata documents. You must make sure you read through. It's a service you do for yourself, so that you know how healthy the strata you want to buy into is or not.
Thank you. I think we have one last question from the WhatsApp. Someone just would like to know if there are any upcoming neighborhoods that have a good concentration of African owned homes.
Just before I answer that, somebody asked, can the buyer realtor work with the seller realtor to ensure the buyer pays more in order to increase their personal gains? Well, that buyer's realtor is not working for you. A buyer's realtor is supposed to be representing the interest of the buyer. Okay, so the way the real estate world works is this: if I'm hired by a seller to represent a seller, I'm working for that seller. I want to get my seller the maximum amount of money or price for their property. Okay, so that's what is called representation. I'm representing the seller. Okay, but when I'm working for a buyer, then I'm representing that buyer. If that place is listed for 500, I want to get it for 450. I want to get it for 430 if possible. So I'm like a bulldog, looking for a way to help my buyer get the lowest price possible. All right. So if somebody is increasing, if that buyer's realtor is working with the seller's realtor to ensure the buyer pays more, then that realtor is not working in your best interest. Okay. In order to increase their personal gain, then that is against our professional ethics, that somebody will do that to increase their own personal gains. That's totally wrong. Okay. Back to you, Spicy Republic.
Okay, someone would just, before we get back to the questions on the chat, we have one on the WhatsApp, and person would like to know if there are any new or upcoming neighborhoods where you have a good concentration of African homeowners. Not like an African, yeah.
African owners.
Yeah.
There are lots of Africans in the Surrey area. Yeah. And there are lots of Africans. If you talk of Africans, there are Africans everywhere, in Maple Ridge, in Abbotsford, in Chilliwack. I've sold to some people in Chilliwack, and there are Africans in North Vancouver too. I don't know of anyone in West Van, but I know of Africans in North Van. I know of Africans in almost every city in the Lower Mainland. But concentration-wise, that I wouldn't know. Maybe if we go to the Nigerian society and everybody put in their address, then we can know, okay, this is where we are all concentrated. But I would say that most Africans, because Surrey is a bit cheaper for us, so a lot of us are located in the Surrey area. Yeah.
Okay, someone would like to say, he says, can you give an estimate for getting a home with a compound, maybe 4 or 5 bedroom in Surrey or in the Tri-Cities?
So when you say a home, are you talking of a townhouse, or we do have some four bedroom townhouses,
with compounds?
Oh yeah, with compound. Yep. We do have some with a little garden at the back. Or you are talking of single family home. But since you are talking of 4 or 5 bedroom, I believe you are asking about single family house. In Surrey right now, to get a good single family house, you are looking at 800, 900,000, 4 bedrooms.
What about townhouse?
Townhouses for 4 bedrooms, you are looking at about 600, 650.
Surrey.
Yeah,
right.
In Surrey.
Someone would also like to know, says what's the best neighborhood to buy now in the GVA? And then what are your thoughts on New Westminster?
New West is good if you have the money, Right now, New West, 2 bedrooms are going for like 450, 500 and above, 2 bedroom condo. So it just depends on what you are comfortable paying, or rather what you are pre-approved to pay. Okay? What you are pre-approved, what is your we call it your buying capacity. What's your buying capacity? And based on your buying capacity, it will tell us, okay, this is how much you can afford, and this is where you can find properties at that price. Okay, like I'm working with a couple right now. They don't want to go above 500,000, which is okay, because I know that most first-time buyers want to take to take advantage of the first-time home buyer exemption, save $8,000. I would do that as well. Okay, but if it doesn't meet your need, then why not look for something? I know that particular couple, they are pre-approved to go higher, but they want to stay at that that point. That is where they feel comfortable. So, which is totally fine. But then they can't get the kind of house they want, where they want, at that price. So that's when you begin to make a judgment call and say, okay, if I can't get this 2-bedroom, 2-bath, the kind of place I really want in Burnaby, do I want to look at New West? Do I want to look at Coquitlam? You know, is that good enough for me? Or do I want to look at Surrey?
Okay, someone would like to know if townhouses have basements too.
Some townhouses are 3 levels. So the main house, I have a client here in Maple Ridge. The main house has a upper level, okay? So the kitchen, the living room, the dining, all that on the main level. And then upstairs is the 3 bedrooms. And then downstairs, she has almost like a 1-bedroom, I won't call it suite because there is no kitchen. It has a living room, it has a bathroom, and it has a bedroom. Okay, so it does have like a basement, you know, but there is no kitchen. In a townhouse, you can't have a townhouse with 2 kitchens. So that particular place has almost what I'll call a bachelor suite. You know, it has a living room, a bedroom, and his own 4-piece bathroom. So whoever is living there doesn't really need to come upstairs unless they just need to use the kitchen. Yeah.
There's a question on someone would like you to go over the first-time home buyer incentives in BC, how it works, and how can they best use
I think I explained that in detail.
Okay, well, we have the recording, and it's going to be on the Car Niger website, so people will have access to watch the recording. But another person is asking, what are your thoughts on condominiums in Richmond? Is it feasible and viable?
Yeah, it's feasible and I just sold one in Richmond. My client is actually completing at the end of this month, and they bought a 3-bedroom, 2-bath condo in Richmond, and they of course it's more pricey. That's what I keep saying, that if you want something in Richmond, compared to Surrey, in Surrey you will get a townhouse for that price. They paid about 560. It was listed for 588. We you know, and it was going to go into multiple offers, but we were lucky not to just get it on time. And they paid about 586 because, you know, the realtor had told us if we don't put full price and all that. The Richmond area is very hot, because that same day we got accepted offer, he had about 5 different people wanting to show. He actually showed 5 different people who wanted to put offer, you know. So the Richmond area is good. There are condos, there are good condos, like I said. You still need to read the minutes, you need to read the annual general minutes, you need to read the depreciation report, you need to do inspection. Please don't cheapen out on inspection. One of my clients, they did the inspection, and after all the things the inspector told us, we saw that this place, they were going to buy into trouble, you know, and they backed out. They backed out. I know it's extra work for the realtor, but it's better, because in the long run, you have a happy camper, you have a happy buyer, you know, that will refer your name to somebody else, you know. So it's better, do inspection, get the inspection report, go through it, and make sure that what you are buying into is not a money guzzler or gas guzzler down the road. And I've had, at least I can, off the top of my head, I can think of 2 or 3 buyers of mine that have done inspection and backed out, you know, so it's not unusual, you know. But first, let's make sure, yes, let's make sure we read the minutes, read the depreciation report, okay? Any other question?
Okay, I think this person is a follow-up question to the one on if townhouses have basements too. So the person would like to know what's the range of the one you described, the
The
price.
one I described, actually that one is a Maple Ridge, and right now townhouses of that price, of that size, are selling for 675, 689. So
For how many bedrooms?
that particular one has 4 bedrooms, 4 bedrooms, 4 baths, four baths, 3 full baths, and 1 half bath, 1 powder room. Yeah.
Okay. Thank you. If we have more questions, please, let's just, I think we could take like an extra 5 minutes and then we'll, so otherwise, thank you so much. Thank you so much, Ma, for agreeing to talk to us on this topic, for taking the time. Thank you so much for everything. We've learned a lot. And we hope that we can always reach out to you for more questions. Yes. We will drop your details as well if anybody wants to reach out or employ her services as well. So thank you, Ma. Thank you. Thank you.
You're very welcome. It's my pleasure. Yeah.
Oh, okay. I think there's one last question if you can take it. The person wants to be precise on what just your opinion, if it's just 1 or 2 minutes, on Westminster key area.
The key area is a good area. I mean, I've sold one of my clients in there, and they really like, it's central, right? It's central to town, it's central to, you have buses, you have the Sky Train, you can easily get to Vancouver. And that particular strata that he bought into, I don't think they've had any major problems so far. So like I said, the best thing is, please read, read, read. I know a lot of us Africans, we don't like to read, but this is the biggest investment that you are making, okay? So you have to read all the minutes. Annual general minutes, depreciation report, engineering report, strata council minutes, because it gives you are buying into a place. So if you are buying into a place, it's like coming to Vancouver. I'm sure a lot of us, we did our research before moving here, before moving to Canada or coming to Vancouver and all that. So also it's a way of doing your research on that particular strata. Okay.
Okay, thank you, Ma. Thank you. This is, we've come to the end of the online session. We'll share your details with everyone. Thank you so much for joining us, and thank you for the time.
It's my pleasure. Thank you for having me. I really appreciate it. Thank you.
Thank you, Ma. Thank you, everyone, for joining us today. I guess we can all say that we've learned a lot. It's been a very informative session. If we have more questions, we could please just go to carniger.ca. We will have access to the recording of this session, as well as the recording of previous sessions and future sessions. So thank you all. And thank you again to Ruti Yayi. Thank you to all our speakers. Thank you, Man. Thank you to Greg. Thank you, Ruti Yayi. Don't forget to follow her on Instagram. And you can just contact her if you need help. Yes, BC Settlements at BC Settlements on Instagram. You can contact her if you need help with personalized settlements in BC. Don't forget to follow us at Spicy Republic on Instagram as well. we are the home of ayamashi. If you want proper ayamashi, you come to us, and we also make other African delicacies, and we can also cater for your events. Thank you to everyone for the time, and then see you next time.
Bye.
Bye.
Bye. Okay.
Bye.
Bye now. Thank you. Bye.
Thank you, ma. Bye.
Bye.
Thank you. Bye.
Thank you,
Bye.
ma. Bye, everyone.
Bye. God bless you all. Bye.
Hi, Ruth.
We did it. Okay, on to the next one.
Okay, then, bye.